Hello friend, I'm your friend Kaustav. Today in this video we'll discuss about hard behavior. So hard behavior is the part of behavioral finance. Have you ever taken any decision by listening to others, like your friends, family members, colleagues, without doing your own research? If so, you have problem of hard behavior. So people are social animal and they feel pressure to conform. The fundamental problem of our society is people who communicate each other regularly. They think similarly. Part of the reason people's judgment becomes similar at similar time because they are reaching to the same information. Say for example, you are regularly going to same news channel, you are going to same newspaper, and you are meeting with people with this, they have also same kind of information access, so their judgment would be the same. So in that particular reason, when people face large group of people, they tend to change their answer because they think this large group of people cannot be wrong, and they actually, this particular gentleman may write and did his research, but he tends to change his answer from maybe right to wrong because he think this particular group of people, so as they are giving the same judgment, they have done their research and they cannot be wrong. Hard behavior may be the most generally recognized of financial market in a psychological context. Even completely rational people can participate in hard behavior. An important variable of hard behavior is word of mouth. People generally trust their friend, family member, colleagues, even media. So one very common example in stock market, people invest into stock by listening to others. Like if someone says in YouTube ki this particular stock is very good, without doing any research, people go and invest into that. Okay, so same way, if actually they listen to their friend, or any stocks come into media saying that this particular fundamentals of this particular stocks is good, they will not do their research and invest into that. As a wealth manager, we normally see one trend is when market is up, so that point of time we see more people participating in equity market. So what is happening, say for example, one person who is disciplined enough, he invested when market is down, or anyone who don't try to time the market, he continuously did his SIP and continuously investing into the share market. When there would be bull run, that point of time, that particular gentleman make lot of money, and out of his excitement, he goes and speak with lot of friend ki yes, I have invested into stocks, I made that much, my money got double, triple, or multiple fold. So by listening that, one type of people, they will come into the stock market when particular stocks is already high or the market is already on top. When that opposite cycle come, that point of time, actually their stock price will fall, and they will think that they cannot make money in stock market. In this regards, this is important. Always be with any investment professional or investment advisor. Advertising agency, they understood this hard behavior or behavioral part of human psychology, and they play it very nicely. So say for example, any new product came in the market, so they create advertisements such a that, so that they will teach you how to use this particular product by advertising. And in that particular advertisement, they will tell what is the benefit of this particular product. I'm just giving you one small example. Thanda matlab Coca-Cola. Okay, so in this world there is lot of things which is thanda, that means cold. Okay, but our advertising agency fit in our mind like that. Whenever we think for Thanda, we think about Coca-Cola. And even in ad also, they will teach us how to use this particular product. Say for example, if any coffee company, they are giving any ads, when it is like winter, that point of time they will teach us how to take hot coffee. And in the opposite, when it is summer, that point of time they will teach us how to take cold coffee, how to make cold coffee. Some operators also, they may use this particular hard behavior very smartly. How? Say for example, any stocks they identify at the very low level, and they put huge money into that. After that, they may actually uh, go to media and tell about that particular stocks. Okay, this particular stocks will do good in that particular days and all that. By listening that, lot of people, without doing their research, they may jump into that. And when that our small retail investor put money over there and this particular stock goes up, that point of time, this big investor, he may come out, he may pull his investment, and enter my retail investor, they enter stocks maybe come down, and my retail investor may stuck in this particular stocks. That particular thing may happen. Okay, so in conclusion, I'll tell we need to identify hard behavior very smartly when we are investing into stock market, or we are taking any decision. We need to do our thorough research, then only we should take any decision. We should not go with others, what others are telling. Thank you so much.